Let me know if you guys can hear me. So, yeah, different microphone today. We had a little bit of a casualty. The vacuuming the room was the casualty yesterday. I pulled the cord, came out, cord fell on the ground, vacuum cleaner, ate cord, and shredded the cord like instantaneously. So, yeah, we are down in microphone and headset for I don't know, at least I don't know. Amazon did that like, oh, get it by, Wednesday, right? If you order now. And I order now, it's like, oh, okay. Item expected to be delivered Saturday. I'm like, ugh, I hate when Amazon does the bait and switch. So I ordered a second one, and that one is supposed to be here by Wednesday. So we will see. But anyway, we're using the different microphone. This is the non-headsetted version. So I have the big piece in my face, and we'll see how it goes today. Um, so if you hear more bird today, it's because obviously this one is a different type of microphone, and it doesn't have the same noise canceling headphone or noise canceling. Um, what's it called? Software involved with it. So we shall see. Yeah, it's gonna be one of those mornings. Anyway, all right. So looking at the market so far. As far as movement goes, the dollar Swiss is really the biggest mover out there. Dollar, you may say, well, wait a second, the dollar US, that's at 102. And you're right, yeah, that one's at 102. But as far as percentage wise goes, it's a bigger move for the dollar Swiss. And all we're seeing is really kind of the dollar reinflating. We talked about it yesterday. We mentioned that, yeah, it was an easy dollar week, few days, few week, whatever you want to call it. And we expected to see a bit of a reversal, and that's what we're kind of seeing from yesterday and today. And you're seeing across the board, right? Euro dollar, pound dollar, both down. Dollar yen up, dollar Swiss up, dollar CAD up. And again, that's an interesting one just because, again, we do have oil getting some strength again. Aussie dollar is actually up a little bit, but gold is also up right now. Euro pound, seeing the pound strength coming back in a little bit, but then euro, pound yen, you're seeing a big drop in that one as well, with some more yen information. So interesting kind of overlay in the last 24 hours. I wouldn't say that anything is kind of out of the ordinary or shattering. Some great reversals from yesterday, which again, we'll take them when you can pull them out. As far as data goes, or news things, obviously we had some of the German data, and again, not looking great. We knew that Germany was already kind of in a weird spot, so it's not really, I don't know. It was already expected to be down, right? And it was down. It was worse than expected, but nothing. I don't know. I mean, it was already expected to be negative, so more negative on negative typically just equals the same negative that everybody had factored in. So nothing too crazy there. CAD data that came in just a little while ago came in as expected. They didn't jump at all. There was a revision last time, so the fact that it ended up not being anything too different, I think that's good. A lot of times when you see that big kind of revision prior, it tends to be not as good this time because it's the tracking is a little bit off on a monthly basis, but it wasn't. So we're all right with that one, right? It was forecasted at 0.1, came in at 0.1. At the same time, there was a revision last time, so good CAD data. But again, typically when the dollar reinflates again, the dollar is going to reinflate. So that's kind of where we're standing right now. We are going to get some talks coming in the next 20 minutes from Bailey as well as consumer confidence. I'm curious to see with all this weakness coming in right now, if this is going to provide some opportunity for us. And we'll kind of see where we're pushing, particularly in the pound dollar. It is kind of a double, so you're playing with kind of two different variables here. But again, Bailey speaking should talk about how inflation is important. I mean, again, they're already in a recession. We already know that. So all the news is just been super negative for the pound. So it does give us the ability to kind of, again, we're seeing weakness across the board. That tends to be a pound strength type move for news. But at the same time, consumer confidence not looking great. I expect to be lower. We'll see if we can break it to like 99.8 or like 98.9, something like that. That may, make the most sense. But we'll see as we get a little bit closer to it. Yeah, so we have those two coming in. As far as overnight goes, here's an article. So that's why China stocks have been on a monster rally day. Talking about, again, China is really kind of the forefront of most of the data right now between just globally on the forex spectrum. and even the commodities, right? Depending on what's going to happen with, shutdowns, not shutdowns, that kind of information. Right now, doesn't appear to be, anything too worrisome. Um, they may soon dump the zero COVID policy, which I feel like right now when you have 20 something plus thousand people, I feel like that's yeah. But that would be great. That would also be a big boom for oil. Why? Because if there's not a zero COVID, no lockdown, because again, Omicron we know is not as dangerous. Um, Overall that turns to be a quite positive sign. So that should send oil back higher. And again, that's kind of if they officially dump that, that's what will get us back into the oil and $90 mark. So, but I am saying I do enjoy like the 315, 320 gas. I think that is pretty cool. All right, going into tomorrow morning. We do have a bunch of data tomorrow morning before we kind of get started. Um, oops. European data coming in at 5, I think, is extremely important tomorrow. The reversals in the European session have been great. Having this flash estimates for, again, the CPI, again, expected to be a downward revision before to 10.6, but 10.4 is nothing really to be excited about, particularly because they think they already have it under control. They don't need to raise interest rates. So there could be, some opportunity with this one tomorrow morning. And then at 8:15, again, kind of a not necessarily weird release, but we're used to that 8:30 time frame. We do have the ADP non-farm employment change numbers. And you may say, well, wait a second, why are we getting this week? It's November. Well, the reason why is because regular non-farm payroll is Friday. So it tends to be a bigger one there. So we're going to get that. And again, it's expected to be 197, right? A little bit lower than what it was before, but nothing that is, again, unless that's a really, really big outlier that shouldn't move the markets too much. The preliminary GDP, I think, is important. Again, GDP going up means that the Fed is not killing everything, which also means we should be bringing some dollar strength back into the market. So that 8:30 release, I think, is more important than the non-farm number as of right now. And then at 10 o'clock, we go kind of boom, 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 right? 8:15, 8:30, 10 o'clock right in a row. That JOLTS data, I think, is extremely important because that's what the Fed is talking about needing to destroy the demand of. And we still only have 5 million people looking for jobs, and we still have over 10 million people with. Now, it's not 11, so obviously 10.4 is much better than 11 is, but it still shows that there's so much demand in the jobs market. GDP going higher, a lot of demand in the jobs market. Inflation is still way higher than it needs to be. It means the Fed still has the ability, and it hasn't, ruined the economy. And yesterday we saw those articles and the comments from Mester saying that stopping too soon has major risks. And again, not wrong at all. So, looks like it is definitely on the Fed's mind. If she's mentioning it, it means it's been talked about in a meeting. And again, this JOLTS data is the demand that they've been talking about forever that needs to be destroyed. That it is still causing problems with inflation. So, yeah. Again, so big, a lot of stuff, and then obviously Powell. Powell speaking tomorrow at 1:30, but we'll talk from now till then. So, definitely a couple things on the menu there in the next 24 hours that we should, be looking out for. And all of them could be pretty decent. As far as where we stand right now. So VIX, it says that it's down, right? It's technically down 0.6, but is it really down? Nah, this is another one of those misleading ones where we kind of opened, where we kind of open from Friday to Monday, we're at the exact same spot. We took once it opened yesterday, kind of went down, and then again, 1 o'clock kind of popped up, and we're in the same spot. There's not really any major news today necessarily at this point that I think we need to kind of watch out for. I would assume that it kind of deteriorates back down again. Looking at the indices, you can see the Russell is always going to be the first one out. Already starting to turn positive, where everything else is just a little bit negative. Not much difference there. Commodities, actually dollar. You can see the dollar, it's on a rise from really 8 o'clock now, but we're in an area where yesterday afternoon we kind of had sellers coming in. European session really didn't give us any information. It kind of just shot back and forth, and then really we hit the 8 o'clock mark and then popped, and now we're kind of can see some sellers stepping in. Now, there are some sellers here, but it's not necessarily the cleanest of levels. If you want to run something like an easy fib from top to bottom, you can see this area here where there are sellers. It is at a 50% retracement mark. So it is technically an area where you're looking at it going, is it going to reverse? And I would say it probably has a high probability of it. If sellers are going to come in, they're coming in here, right? Because again, we had this nice push yesterday from that 5:30 reversal, drove it straight up, and then sellers came in for profit taking right at the end of the U.S. session, and then we kind of retreated. But again, impulse correction, we held. Will we get another impulse move, or is this going to be the exhaustion move for the reversal? So, um, the dollar right now is in a spot where overall, looking at today, um, there you go. We know we have consumer confidence. This is the big one that kind of changes things around, right? This will be the big one, and we'll get that in about 13 minutes. As I said, commodities all technically up right now, right? And again, some of that has to do with the dollar, and not only the dollar, but I would say a lot of this actually probably has more to do with China than the dollar. Just because if they're getting rid of zero COVID and they're not going to do lockdowns and they're not going to shut everybody down, that means demand will kind of surge beyond what was the expectation. So all commodities should rise because, again, if China's not closing down and shutting things down, that means that they're going to be, that commodity absorbing monster is out there. Even though we know that their economy is, got some problems, um, you know, they're not in the best of situations, but um, it could be much worse, is what I'm saying. Um, so yeah, that's where we're at right now. All right, let's go over to the Aussie dollar. So Aussie dollar, we talked about this level down here at 66.50, and we said that 66.50 was going to be an area where we're looking for kind of bounces and profit targets. And you can see we got that late last night. Well, I guess not late, not super late. It was like 2 p.m. But again, the bounce here off of that one was obviously much, much later. So we got the bounce we were looking for, and then really from that 7:30 time frame, we kind of quite a heck of a rally all the way back up again. So nice. And again, 1, 2, 3, it did reverse off of that one. 4 is what broke it and then kind of came through and base. So right now the profit target is kind of what was hit. It hasn't retraced all the way back to the 78, but so we'll leave it there. But we're a little bit late for this one. In looking at this, you can say that, hey, listen, there's some selling going on right here and a nice leave of it. That's what we kind of ran into at that 5:30 time frame. There's your 5:30 reversal for the morning, and it's already taken off. And actually, the trade I believe is out. I had an alert on this one. Yeah, it's out. There's 1 to 3 right there. It's 2.99. You can see it's well past. So yeah, not a whole lot we can, really we just finished up the trade just a little while ago and we're basing back. And you can see it literally bounced exactly where it should have. Right now I'd like to kind of hold off on this one. Just with, obviously consumer confidence coming in 11 minutes. This one should provide some movement. But I will say, based off of how this one is looking right now, yes, it did bounce where it should have. It is rallying right up. If we take this down to like a 5 minute, you can see it's been pushing steadily up, right? Steadily back up again. Before news, if that consumer confidence is better than expected, if it is not going to break through 100, that kind of opens us up to dollar strength rolling back in, which would make this one a short. So seeing this pre-market move up is where we typically would turn and look for it to push back down again. So it's kind of setting up right now for a short, with news coming out in like I said, in 11 minutes. So, let's see, do I have anything over here? No, I don't have anything on that note sheet. All right, Aussie. So Aussie, we talked about having this Harry Potter here. Again, it has not been triggered yet. You can see that yesterday, early morning, 2 o'clock, we hit it. We came back down and we started basing in here again. First at 3 o'clock and then down here at 7 o'clock at night. Like this one. I'm good with this one. I like the fact that it hit it, based in there again, hit it, drove in there again. Means we're still on for this one. And you can see the basing that is still occurring in this level. We'll remove both these things. Let's pull some fibs from. We'll do it from there to there. You can see we are at an area right now where we have selling as well. Now, this one is a little bit opposite, but it does have the yen involved. And what we hear in the next 10 minutes from consumer confidence is going to affect the yen. So we are at a 50% level. There is some selling that has occurred in here. Does that mean it's an automatic pre-market sell? I think that's hard because, again, the Aussie is the proxy for gold as well as the dollar movement. And the yen is obviously the proxy for the Dow. So a little bit harder of a play right now. It's not the ideal setup, but I would say right now, if you are leaning more towards this and you think we're going to have Aussie weakness because of dollar strength, that could also lead this to roll back down again, and again, probably roll back into the same Harry Potter level. But this Harry Potter level is still live. Let's put it. I'll do it here. Oops, it's in the wrong spot. I know it's in the wrong spot. Move it down. Take this, turn this green. Put it there. And that's a break of 92.12 down to 91.47. All right. Let's see. Euro dollar. So euro dollar, we talked yesterday about having this target down here at 103.60, and you can see we came down there and tagged it at about 1:30 in the afternoon, and then you can see how much traffic has like really been caused in here. We've been unable to leave it. And we kind of came down and we touched the 61, and we kind of went up and then came back down and grabbed it again. Um, it's not a major mover right now, but it's also in a time where we've seen a lot of dollar strength, and in this last 30-minute candle, we are seeing price rally back up again. Now there are some levels in here. We are at a 23.6, so there will be some people in this high to low that are interested in taking this one. Um, it is a level. It's okay for a level. Um, I think there's some better opportunity out there in other charts right now versus taking something like this. Just because, yeah, it's at 23 and there's some bouncing back and forth, but it's not something clean. It's not like a level like this. So right now, looking at this pullback, yes, I think it probably continues to go back to the downside. Let me see if I can clean this up just a little bit. Yeah, you can see this is the level that I'm concerned about right there, and that's kind of where we're hitting. And even down here, um, I wouldn't say that that's even really the best level. Um, God, I hate this chop, and the problem is, right? The problem with this is like early morning, right? This is a week ago, right? This is Monday, Tuesday of last week, and then this is basically 3 days of close. So there's no U.S. influence on there, and that's why you're not seeing the big movements on Monday morning. Um, and you can see minus 0.01. Um, I kind of, I almost want like, kind of rooting for like a big move. Like, can we get a big move just to blow all this stuff out? Like, blow it out, give us something that we can actually trade with it. So, yeah, I'd like more. I'd like more. I'm hoping that this pullback is really kind of something that slams it down, and I hope we push all the way back down again. So, no new setup on this one for me, unfortunately. Down, that's a 61. God, there's a 61 and a 23 in there. It's this overlap right here. It's the 23 on the big spectrum, and then near spectrum, it's the 61. I hate when they do this. It's like, with the dollar weakness, everything's looking dollar strength right now. Mm. Yeah, I mean, it's there. Like I said, a little bit more complicated. I would like this to blow through. I like this to blow through and come all the way back down. I think that makes the most sense. Is that there? Trying to see if it does bounce off of this. I'm trying to see what it's going to take to get this in row. It's not lit up now. Yeah, I'd like to see this go lower. Um, yeah, that's all I got on this one. Euro pound. All right, so there's euro pound. So, bum, bum, bum. Yesterday morning we were sitting right here, and we talked about this level. If we got a break, there's your break. There's your entry. Hit 2 o'clock in the afternoon, and your full profit target took you out at 2 o'clock this morning. So small trade, 25, 30 pips you're able to grab on this one. But again, if you were here, pretty easy. Some of you may have removed it once it broke through here, right? But again, old level, came back up sellers, and you can see it actually did well. Here, and here all provided the same opportunity. So, but had you taken it right on the exit at the 85 as well, because again, we drove pretty deep, came in again, and it kind of hiccuped. Had you taken it on the way out, you were good. If you didn't, if you waited for the retracement, you were still good. Doesn't matter either way. So, um, yeah, right now I would say where it's sitting. I think we got to get some of the data that's about to come out, just to kind of see where it drives us. It has not hit its full profit target yet on this one, which is fine. But it is definitely now boxed in, and a little bit of consolidation down here, up here, consolidating. So I would say again, we're waiting for price to come all the way down before we look for a long, or even really necessarily up top. But yeah, right now we're kind of sitting in the middle of the range of two. So not much we can do. Again, we took this yesterday. Easy 25, 30 pip grab on it. Should have been, you know, something that everybody could have saw. That's one of the ones. There's a couple trades that we talked about yesterday that have triggered. This is definitely one of them. Very end. So, yeah, we talked about the two profit targets yesterday morning. We were sitting right here. We talked about hitting this one right at 9 o'clock. There's target number one. You can see that we based on target number one. We came down, we tagged target number two. We went back up, used the same base from target number one, and came down, hit it again, and went beyond base and continued to go lower. So you can see a lot of buying and selling in that area. Where we are right now with this one, I actually like this one more for a short, kind of for the same reasons that we were talking about with the yen before. And again, 3 minutes until that release. I like this one because, again, we're kind of at a level. Let me remove these. Let's see. We're going to keep that there. But there's also a level here. Whoops. And let's take fibs from here. There you go. So this is kind of what we're dealing with right now. Now, again, it's US based data, right? It's US based data, so it's not necessarily, you're playing proxies on it, but it's kind of doing the same thing, right? It's pulling back up into a level right before news comes out. We got 2 minutes before news comes out, and that will, it will move some. Oh, hold on. What? Sorry. Pop up. Okay. Sorry. I don't know why it's doing that. What? Sorry. It's like popping up and it's like big picture stream VR. Like what? I don't know what that is. It's probably from another window. Anyway, there you go. It's pulling back up to the 23. We pushed through this level before. We've hit it again. We've hit it again. We've hit it again. We've hit it again. We have a weak bottom on there. If we can get, a little bit of help from obviously the yen. And again, we already know that the euro is not in a good position. But if we can get that yen strength coming back in again, this one continues and pushes to the downside. Like I said, do we have enough room? Let me see. Hold on. Yeah, 1 to 3 is right there. It's before the level. Not a bad little trade setup. There are worse things out there, obviously. All right. Pound dollar. All right. So pound dollar. So here was the move from yesterday, and you can see we kind of poked through. We pulled back up again. We punched through again and pulled up again. Had you taken this one the way out, you can see that it drove all the way down. This was about 50 pips to the downside. We drew where you should get profit out, and you can see it literally came down and was like somebody was watching the program. Literally tagged our profit target, went a few pips beyond it, and then reversed back again to that same level. Remember, Harry Potter trades, we tend not to take them more than once. Had you taken this one on the push through, which I actually like the way that it formed on the lower time frame. Actually, you can see down here, you can see it hit, it came back up, and then it based, and it's like, oh yeah, it came over here and pulled up. So it's a bit more aggressive. I was actually watching this one, and I like this one for the initial push through. But had you waited for this one, it actually did come to the profit target, so I'd be a little bit more leery in this one. But had you got it, it would have been up to a 2 to 1 before it came back up again, and now we punched back through. So pretty simple trade. On this one, again, we did have the pullback up. Let's see what we got for the confidence number. We're going to give it to us. Nope. I'll give it another second. Hey, Spanish inflation fell again sharply in November. Could that be because they are... Oh, there you go. Look at that. So that's good. So overall, well, I say that's good, but it's good in the sense that, hey, listen, confidence was not as bad as what they thought. But that also goes into the whole kind of, hey, listen, does the Fed really need to slow down? If confidence is going higher, the GDP is looking good, the unemployment rate is not moving, JOLTS is still holding high, and inflation is an unacceptable rate. Exactly why would the Fed need to slow down? And again, the Fed is making comments about, do we need to actually, stopping too early is bad. So that's good. All right. So that should help us bring, a little bit of strength in. Now, again, this is popping a little bit because, again, confidence is lower. But at this point, I think, again, this overall should be more of a dollar-based move today. And again, this pullback, I think, is not bad. I'd like to see what the yen does with it. I think the yen's going to probably get a little bit more strength out of this than the dollar, but we'll see how it goes. Yeah, right there. All right, so this one is a little bit choppier. This one is a little bit messy. Again, yesterday we talked about this dropping lower. We were looking for a push. That's why we left it all in there. that's kind of where we're at right now. You can see this one is obviously bottom, actually top, bottom, base through, base through, base through, base through, and then base in there again. So obviously a big level. Right now, looking if this is the true bottom when we do start to rally back up again, I do want to highlight that there's a level sitting right here that I like that is right at a 50% retracement. It's a one candle base in a new level that's fresh. It dropped at base, it pulled back, touched it, and then kind of having a not I want to say avalanche, but nice little push off of there. I think this is a decent trade. The risk on it is probably not for everybody's liking. It's about 25 pips, but that means taking it to a 1 to 3 is pushing us about 75 in the other direction. I think it was pretty good. Like I said, I don't, there's not with the risk level right now lately with the volatility we've had in this pair. I mean, it's a 200 pip ATR. I don't like a lot of pound yen trades, but I think this one is actually not bad. I think this is pretty decent. Hold on, this pop up thing again. Wait, what? What did I just do? Hold on, I just closed the window down. Okay, don't know where that is. Anyway, I think it's a pretty decent level as far as buys go. I really want to wait until it gets down to 164.60. Kind of makes the most sense for me about where I'd like to put it. Dollar CAD. All right, so we talked about dollar strength, right? Again, a lot of dollar strength in preparation for this one. Whoops, hold on, lost the mouse. Where'd it go? There we go. We're up at a level right now, and you can see that it started to chop through that level pretty decently. 135. Hold on. It's 135.54. You can see that it hit it, pulled back, hit it, pulled back, hit it, pulled back again, and then kind of came up again. I don't know that this zone is going to sustain anymore, which means the next level that we really have any buyers coming in at is up here at 136. Now we're in a racetrack, so there's really nothing that should slow this down to the top side if we can continue to break through. The big thing is, will oil get involved with this one? Overall, this is a lot of movement. European session started right here. Okay, right. There's a base that pulled through yesterday. Currently, from when the Europeans got involved in this one, we're up 165. So we're over a daily ATR right now with movement already in this one. And again, I think it's because the Europeans are starting to see the writing on the wall. But right now, the problem is we're sitting in this. So let's remove this because again, we knew that we had a racetrack if we passed that level. Right now, we can kind of run this up. Actually, I'm gonna pull it off. There'll be people that draw it from low to high. This was a 10 change, so I'm going to change it. I'm gonna go from here. That's what I was looking for. All right, so I'm gonna put a level here if we stop. Sorry. When do we get the reversal? I kind of like this one going higher. I think before we go long, though, I think we really need for it to base and kind of give us a pullback, just to confirm that we have people in there. Again, obviously, old level of sellers. It did hit 3 times right there in quick succession, kind of eating those levels up. Those levels should reverse. Um, hmm. We should get a bit of a reversal. I'd like to see a pop, a base, and a pullback, and that's where we take a long. Otherwise, if we get it fair to go higher here, it could be a short as well. If we pull up and then we pull down and then we fail to go higher when we break through that bottom, there is a trade here because again, this is over a daily ATR worth of movement in again one session, way more than what it should have done. Right? When I say done, I mean like statistically speaking, what is average? It is obviously above what the average would be. So yeah, right now, yeah. Yeah, we'll see if we can get a top on there. No trade setup currently right now. Give this one a little bit of time to marinate, and we'll see if it's going to be a reversal or not. Probably be like a 12 o'clock type trade today. Dollar Swiss. Okay, now dollar Swiss. We talked about obviously bracketed in by 94, 95. You can see we came up yesterday morning. We were sitting right here. We came up, we hit it, we pulled back down again. We came back up again late last night. We hit it again. We dropped back down again, back to a level of basing, which we expected, and hit it again. So there's your one, there's your two, there's your three, there's your basing at four. Obviously, it's going to break. Came back up, grab buyers, and punch through. Okay, so we're gonna take the window off, the box off, but we are going to leave the um, we are going to leave the 95 there because it's important. So we talked about some selling up here. We got a little bit close, and there's a level sitting right here, and it was touched, and it kind of punched through it with news. Right now, again, we are seeing kind of the dollar weakness roll back in. I think that's because the data was really good, so everybody's trying to get into the dollar and being kind of reversed on it. Right now, as far as where this one runs, I'm going to take the 78. You know what? I'm just going to move it back. That's not what I want to do. That's this one. I'm going to move that back there just so we know where that level came from. But I'm going to actually take this one and probably start running it from here up. I like to see where the pullbacks are. Now, interesting spot. Got a spot right here, right? There's a confirmed bottom. It is pretty deep, but it is at the 50. So if we come back again, this could be a launch point right here for a decent little trade at 94.69. Yeah, not bad. I could go with that one. Like I said, I don't want to get involved right here at 95 again. I think it'll chop right through it. Well, when I say chop right through it, not like slice through, like chop back and forth. I don't want to deal with that one. But if we can drop lower and we can get some help from some technical traders in there, I think that's decent. And again, it is a level. It did kind of confirm over here, even though the original. This is not the original. It's all right. It's all right. Dollar yen. All right. So that's what we're looking for dollar yen. We kind of came through in base, and there was a small trade setup. We pulled back in there again. If we reestablish kind of more near term, I'd say that the trade was more kind of here. We're looking for the pullback. And again, actually, there's kind of the confirmation, the overnight there to there. There's the kind of touch of it. So it's a level we talked about yesterday. Again, is it 20? It is a 23 pullback level, not the original. It kind of hit and shot back through. And again, right now, if we're getting that yen strength like we talked about, you're seeing yen strength here. Are we getting it over here? Nah, it's still choppy right here. Um, Again, kind of entering choppy back and forth here. Again, a little bit choppy. So we're not getting as much yen strength as possible. We are seeing dollar weakness come in still. I was hoping we get more from that, but it looks like the answer is no, not today. Not gonna help us. I like to see what kind of bounce we get off of that. Right there. Something along those lines. All right. All right. All right. It's all right. Crypto's up a little bit, right? Doji up the biggest. TLT did take a big hit in the overnight. And again, there's kind of a top. We talk about a failure to go higher there, kind of tested, and then we closed there last night. Probably got some room to run on this one. And again, we'll see. We're seeing that dollar weakness now, so it's pulling back again. I'd really like to see what that JOLTS data is. If that JOLTS data comes in big, because again, we know companies are laying people off, but with confidence going higher, yeah, with the confidence going higher, or not higher, but better than expected, that could give the opportunity for again a nice little boom. So let's see. Obviously, oil up. Okay, and again, look at this. We pulled back to the 23. We based in here again, and then we used it to go higher, right? So let's see. Let's pull. Although it hasn't hit yet, we're going to pull this off to clean it. And again, we know why. Yesterday we talked about, again, China was going to be the big piece of this one, locking down. And we had the opposite. They didn't lock down. They're talking about removing the policy because they know it's not something that's sustainable. So we are kind of bouncing around a level that we drew yesterday, right? We already had the Harry Potter off of it once. We tend not to take it again. It did hit it, and it did hit it again. With it kind of peaked a little high here, right? I think the biggest thing we got to watch out for right now is really, China basically saying that, yep, we're going to dump the policy. It's outdated. We don't need to use it. And I do kind of agree with that. I hate to say that I agree with some policy coming out of China, but I agree with the policy coming out of China for this one. Um, Yeah. I mean, if you think about it, right? Omicron wasn't as deadly or wasn't as harmful. I don't want to say deadly, but again, obviously the symptoms, everything else, not as bad. If it's going to give you the immunity that the United States has, let it go, right? Let it go. Um, but there's a but to that. Hmm. If they remove the zero COVID policy where they don't care, right? They're not doing the lockdowns. They're obviously going to see a lot more cases, right? They will have surges, and everybody like, oh my God, China's going to fall into the ocean, right? 1 million people got COVID today in China. Yeah, there'll be a slight kind of minor release. I wonder if that's what happens. You'll see a burst. You'll see like crazy numbers of COVID, obviously. But again, that's kind of what has to happen to get that herd immunity. Wonder if that is one of the driving factors that will start to turn this back down again, or be one of the factors from now till the end of the year. Um, hmm, hmm, hmm. Could be a mover. Um, Interesting play on that one. So yeah, right now, again at a level, we'll see if we can get any type of reversal in this one. Yeah, I don't know. Like I said, I understand why it went up. I'm trying to think if there's any other reason why. Um, 23. We're having the problems at now. Hmm. Yeah, I feel like actually this is probably yeah. The more I think about this, yeah, the more we're probably at an area where there's probably going to be some shorting. Like I said, China Day was great, but the China Day is now in up 2.4%. Yeah, up 2.4%. So yeah, yeah. Natural gas also up a bit, but is it really up? Not really. It's up from where we closed, but we're kind of still banking around that same level at $6 or $7.37. We've had a bunch of selling in here, and again, this is probably a similar scenario. It's up 2.3%, which is fine. There's a lot of selling happening all in here, and that's what we're kind of slamming into. Overall, um, I don't know. We're up on the high side. I would say I'm more bearish on this one. I don't really like any of the levels. They're a little bit too wicky for me to get kind of a decent return on it. Um, it's all right. I'd say more bearish. I think all these are kind of we look for reversals tomorrow, and they look to be a little bit more red. Um, but no true trade setup on this one. Gold, it's up, but is it really up? No. Yesterday morning, that 5:30 reversal was amazing. We came down, we hit the end of the day, and we hit again the old level, pulled back up, and we're kind of based in between two. So right now we're kind of between a rock and a hard place, sitting smack in the middle. It looks like it's great that it's up, but it's not really necessarily up from where we were. It's up from the close, but we were sitting right here yesterday, so we're up just like the smallest of bits. Nothing too crazy to worry about. I like this one. I like to get a little bit higher there. I do think the data that we have coming in tomorrow, I think 8:15 is the ability to sell. I think this 8:30 is also the ability to sell. Um, and you may say, well, why would we sell with positive data here? Well, again, this data looks great. That's every reason in the world to. Ooh, look at this, 115 now. No discussion with government about timing, pace of baby assets. In comparison to other countries, the UK labor market has proven to be much more constrained than we anticipated. The cube was never intended to generate revenue for the UK government. I love this. So I'm gonna laugh about this one, right? I don't know if you guys, and again, you guys may not understand this. The QE, right, quantitative easing, was never intended to generate revenue for the UK government, right? You guys remember the too big to fail scenario, right? When they bailed out, they bailed out the banks. They made an example of Lehman, but then they bailed out the rest of the banks. The warrants that they purchased in Bank of America, yeah, they went in there and they secured that one at $6 a share. And then when they sold their final shares back, when I say they, again, this is the government, right? When they sold their final shares, it was 12 and a half bucks. So you do the math on that one. They saved it, purchased it at 6, and they doubled their investment. But remember, the taxpayers paid for that bailout, but did the taxpayers get paid back for those warrants? No. So yeah, so that's why I laugh at things like that. Hey, it was never intended. We were trying to help the people, not make money off of them. Really? Because the United States, we make money off our people, right? But then tax the rich. So yeah, that's where we're sitting. So yeah, I'd like gold to rally back up again. I think if we can get it a little bit higher for tomorrow, I think it's a sell. I think those are all decent areas. I'm comfortable with that. Silver, again, it is up a little bit more. It looks like it's up huge. It's up 2%, but is it really? Nah, not really. We were calling for this level up here yesterday of 2160. We're not even there. You can see that's where it kind of bounced off of yesterday. Came back down, grabbed the old 21 level, and again, we're kind of boxed in if you want to draw tops and bottoms on this one. I think we actually drew this one yesterday. That's what it's looking like, right? There's a base, there's a touch, there's a touch. Boom, we just slice right through it. So we're sitting right in the middle. Not really a big deal, right? Yeah, sitting right in the middle. What do we got? Apple. And again, you look at this and you're like, wait a second, why is Apple down? If China's not going to lock things down, that's great. Yeah, that's true. It's true. But there was an article out today that talked about the what was it? It wasn't glow. Glow wasn't the right word for it. Man, what was the word? It's like on the tip of my tongue, but I can't think of it. Basically, what they were saying was the mystique. It wasn't mystique, but you guys get the idea. The mystique of tech stocks, like the technology sector, is over. And I thought that was pretty interesting because technology is kind of so forward focused. Tesla, again, you're like, wait a second, it's up 0.46. Yeah, from where it closed, but is it? Is it up? No. Funny enough that we keep running in this level here at that 50% mark. The old one. Look at that. There's the bottom 1, 2, 3. It went higher. It grabbed the gap right there. 61. Boom, boom, and boom. So look at the gaps in this one. Tesla gaps all over the place. All right. So drop it down to 15. So part of the problem with today, again, having consumer confidence come in just a little bit after, obviously, the open today, always makes the opening prints a little bit more challenging. All right. If we drop it down to a 15-minute, this was from yesterday. Again, you can see that we blew it out yesterday. We didn't necessarily need it. Here is the opening print right here. Now, here's the overnight bottom, kind of what we were looking for. Your opening print candle is this red one right here. Here's your long position because, again, it touched it right on the opening print. Went right down. Your 1 to 3 is sitting right. There's 3 point, so you guys can see it. 3.07. Right. Whoops. Hold on. Let me make sure we get this right on. 3. Actually, 3 is right there. There you go. So pretty close. At this point, you obviously are locked in to break even. It's got a little bit more room to run. It was pretty close. But there's where your opening print stands for as of right today. Again, drove back down into the most recent base. And it was a level we had talked about before. You can say that this is, if I can continue this across, there was your touch late last night, and there was this. Right? So there was the trade already. Right? So either one of those two works just fine. NQ. Now NQ 930 started here. So NQ, there you go. There's your 930 candle. Now, as far as the pullback goes, there was no pullback. This is one of those ones. If you had taken this one in options, you are still live in this trade, right? You have not gotten stopped out. If you took it in futures, you got stopped out. So you're basically one for one right now between those two. Wait, what did I just do? Sorry. So again, not the end of the world. This one is obviously turning and bouncing. It's the weakest right now, but it is starting to rally back up again. I will say though, looking at this one in the overnight down, right here is a decent level that we may get some profit taking coming in. I'm going to throw something right there. Something along those lines, right? So not bad, but again, this would be, had you taken it with an options product, you're good. If you did not take it with an options product, you took it like futures, you probably got stopped out on this one. Which again, hey, you're 1 for 1 on the day, right? Or 1 for 2, 1 and 1, right? 50% win rate. YM. All right, so YM at 745 came through. Unfortunately, this would not have been the level because 845, we're already down here. We drop lower. This would have been a no entry. It was a close one, but it is a no entry. Your 930 candle is this green one right here, this crazy wick. But again, we missed the short, but we missed the long. Could we have gotten a short? There's your confirmed levels. Yeah, that would have been a trend. Let's see how this one goes out. There you go. There's your 930 push. Again, missed it long. Had you gotten it long, you're good. Pushed it straight up into the base and the confirmation, right back down again. So there you go. Would have been no entry for a long, absolute entry for a short. Would have worked no matter what you traded it with, and reversal right there. All right, the Russell. Yeah, there's your 930. I can already tell you right now this is. So again, very choppy. 845 has already pushed it through. Had you dropped it down to a 5-minute, and again, I'm not going to count this one for statistics, but obviously very easy to see. Had you boxed off this area right here. It did not get stopped. Came down, and there's your 925. There's your 930 start, sitting in that level. That's what it looks like. Right there. So, not going to count that one as far as statistics go. But, with that said, again, looking at the chops, trying to figure out, is there a bottom here? Sure. Oops, not 3. 5 works just fine. 1 candle bottom, came back up, tested, 930 or 925, tested, opened 930 right here. Again, 9 to 930 was straight down into a level. So again, meets all the requirements. We just had to drop down to a lower time frame to be able to grab. And then we took off. So again, some fun at the opening prints today. There was a couple of them. You know, some of them are not bad. Some of them are long. Some of them are shorts. You know, is what it is. All right, so that is it for today. Let's go ahead and do the giveaway. So remember, Sean won yesterday, right? Sean won yesterday. Who do we got in here? All right, everybody's in. Winner of today's drawing is Marina. Look at that. Go Marina. Leaderboard. Man, we've definitely been passing the. We got no streaks going lately. We've definitely been passing around. Definitely been passing around the wins. I didn't say her name, and she won. I said Sean. Right? I said Sean, and Sean did not win. Right? Dollar CAD. See, I hate this because it's like, yeah, we're gonna transfer some money over, and you're like, no. We want this to go the other direction. We want CAD strength, not CAD weakness when we have to transfer money. It's like, gotta hate that. Anyway, remember, tomorrow, big morning. It's going to start early with the flash data. You know, make sure that you guys are, again, in your positions early. The 8:15 and 8:30 are both very big releases. Top 5, no, but with where we are in the economy right now, both of them are obviously decent players. So watch out for both those before we get on. We're going to start at 9:30 tomorrow. And yeah, remember we have again, if you set your positions early, make sure you're looking to take profit before that JOLTS data comes out. That is the number one thing right now that they are looking for because that's the demand destruction that they've been talking about getting rid of. So you need to be extremely careful with that JOLTS data. So just make sure if you're in positions, make sure you trail your stops, take yourself out, and you can always get back in. Just again, be very, very cautious with be very cautious with this one. All right. So with that said, I will catch you guys tomorrow. Everybody have a great trading day. If you need me, shoot me a message on Discord, and I'll catch you guys then. Take care.